Welcome everyone to Bayford Analytics channel. It's time for our weekly financial calendar where we bring you the most important upcoming events and announcements that could impact the global markets. So let's dive into what's happening this week, starting with Monday. Actually, I'm right now showing you the Japan unemployment rate, but we're gonna get to that. Just let me tell you what's happening Monday. Monday marks a holiday for the markets, so expect reduced trading activity and liquidity. It's a great opportunity actually for investors and traders to catch their breath and analyze the events ahead. So that's today. Actually, I'm gonna upload the video today. On Tuesday, we have some crucial announcements. Bank of Japan will be releasing the unemployment rate, as you can see, which is expected to come in at 2.7%, slightly lower than the previous figure of 2.8%. A lower rate than expected may indicate a healthier job market and potentially boosted investor confidence in Japanese economy. Conversely, a high rate could lead to concerns about economic stability, but since we expect it to lower, it's good news actually. We're gonna see. Simultaneously, let me go to that. United States consumer confidence. United States will announce the consumer confidence, which is forecasted to be around 99.1 compared to the previous reading of 101.3. This indicator reflects how optimistic or pessimistic, let me show it like that. Yeah, exactly. Look right here, how optimistic or pessimistic consumers are about the economy. If the reading surpasses expectations, it may indicate increased consumer spending and overall economic growth. However, a lower than expected figure could lead a cautious outlook at potential market volatility. So that's pretty much it. In Wednesday, let me open Wednesday. Yep, we have a lineup of significant events across the globe. Firstly, Reserve Bank of Australia government law will be delivering an important speech. Traders and investors should look closely, analyze his remarks for any hints of future monetary policy decisions, which can significantly influence currency valuations and market sentiment. So that's it. And Australia will also release the CPI year-on-year figures, as you can see right here, which are expected to show a slight increase at 6.4% compared to the previous reading of 6.3. This inflation data is closely monitored by investors and policymakers like us. Too, higher inflation than anticipated may lead to speculation of higher monetary policy, which we've seen in many countries these days by the Reserve Bank and by the Reserve Bank of Australia. Sure, this can potentially impact interest rates, bond markets, and Australian dollars. So we should look after that. So meanwhile, Germany. Let's yeah, exactly. Germany will announce the preliminary consumer price index month on month, with expectations set at 0.2% after the previous reading of 0.4%. This indicator offers insights into countries' inflationary trends. You know that a couple days ago Germany went into recession, and this indicator became more and more important right now. A higher reading than expected may suggest potential inflationary pressures, potentially influencing the European Central Bank's future policy decisions and impacting the euro and European markets and the world actually. So in Canada, let's go to Canada here. Keep an eye on the GDP month-on-month figures. Expectations are slight contraction of minus 0.1% after a 0.1% increase previously. A contraction in GDP, as anticipated, may raise concerns about economic growth, potentially leading to a weaker Canadian dollar and market adjustment. And lastly, the United States will reveal the job openings data, expected to be around 941 million, slightly lower than the previous figure of 959 million. Higher job openings may indicate the strong economy, potentially boosting market confidence. Conversely, a decline on job openings may raise concerns about labor market conditions and economic growth. On Thursday, if you go to Thursday, uh, we shift our focus to the United States. Uh, Again, the weekly unemployment claim figures, um, as you can see right here, are set to be released with expectations around 236,000 claims compared to the previous figure of 229,000. Lower than expected claims may be interpreted as positive news, indicating a robust labor market and potentially boosting investor confidence. But we're gonna see. We're gonna see what's gonna happen. Additionally, uh, right here, we can see in 1 year chart of ISM manufacturing purchase and managers index at the same day, a key economic indicator we will be announced. Expectations remain unchanged at 47, reflecting a contraction in the manufacturing sector. A figure above 50 indicates expansion, while below 50 suggests contraction. We should look after that. If the index remains unchanged as expected, it may confirm ongoing challenges in the manufacturing sector, potentially affecting investor sentiment and industrial stocks. So that's pretty much it. And in Friday, we have one thing to look after. Uh, we wrap up the week with a significant announcement from United States again. The unemployment rate for the country will be unveiled, and expectations are set to 3.5%, slightly higher than previous reading of 3.4%. A lower unemployment rate that anticipated may signal a strong labor market and potentially boost investor confidence. Conversely, a higher rate could lead to concerns about economic stability and potential impact market sentiment. And yeah, that's actually that wraps up our overview of the potential market implications of the week's key announcements. Remember, it's crucial to stay informed and look at financial calendar and monitor these events closely to make informed decisions in the ever-changing financial landscape. So that's it. Thank you for joining us today. Be sure to subscribe and hit the notification bell to stay updated on future financial insights. I'm gonna be sharing shorts, YouTube shorts, and these stuff, and you can follow us from Instagram, Bayford Analytics and stuff. Until the next time, happy investing.